All right, welcome to the global macro update here. We're going to be waiting for a few more moments just so people within the Discord can join in, but we will be starting this very soon for this great Monday morning. Overall, we'll talk about it a little bit later, but it's been like a little bit more risk on. The S&P did break up, but we got a massive sell-off, huge. And that changes it up a lot. And we also saw the euro absolutely boom today. So in the FX markets, I am looking for continuation patterns, longing euro and shorting some other safe havens, as well as some risk on currencies that have been proven to be relatively weak compared to things like New Zealand and Australian dollar, which has proven to be a little bit stronger. And I'm talking about the Canadian dollar in this particular trade right here, which is a potential for me that I am looking at right now. But we are in the low volume time, I guess you could say. So I'm waiting for the Australia and Japanese stock market to open up and really see some volume before I jump right in. But we'll see how it goes. It's the end of the New York session. And I wanted to see a little bit of confirmation before jumping right in. Pretty happy that I did. And we'll see how it goes from there. Don't think I want to enter that just yet. We're going into the lull point in this next couple of hours. So hopefully it pulls back a little bit, respects this previous resistance as a new level of support in confluence with this ascending zone. And we get a nice little entry for a continuation to the upside. So not really going to be talking more about that. We're going to mainly look at the SPX. So let's get our recorder and jump right into it. If you do have any questions within the live section, don't hesitate to ask and we'll be able to help you out. So I'm going to get the TikTok going. Just wanted to charge my phone for a little bit and then we're going to jump right in. All right, so let's get the TikTok, which has been working for me without a problem. A lot of people are saying that it's going to get banned and everything, but no sign of that just yet. All right, going to get a little bit of coffee like always, and we'll jump right into it. I just clicked the live recording for TikTok, so we're recording live on TikTok now, and all we're going to be looking for is to understand global risk sentiment. How's it going, Truck Nubs? Hopefully you're having a fantastic Monday. All right, and let's get the recorder going. How's it going, traders? Hopefully everyone had a great weekend and is starting their Monday off right. So first thing we're going to be looking at, like every single global macro update, is going to be the S&P 500. We do have a few people. How's it going, Truck Nubs? And Christian. Trucknub says getting hammered with XLM. So we will look at the altcoin market as well as the general cryptocurrency market here in a little bit later part of the video. But first, we're going to jump into what is the overall risk sentiment. Are global investors more risk tolerant? Are they worried? Are they fearful? Are they optimistic? Are they hopeful? What is the overall sentiment within the global macro structure? And this is a video trying to understand that for this upcoming week. So there definitely was a pretty big shift recently. And if we go to, let's say, for example, the 1 hour chart, take away this, we were looking pretty solid. When we go back to the 4 hour, why did we think it was solid? Well, this initial descending zone with the anchor point at the all-time high of the SPX, and then we see a lower high back in early June, and then we tested that for a third time, rejecting for a key level of supply, which, in my opinion, 3 validations is a key level of a trend line, or creates a trend line. So then once we saw a break, we were looking for a nice move to the upside, validation of that previous resistance, creating a new level of support somewhere around there, which we did get. And then once we got that, we started seeing a bullish move to the upside, which was great to see. And we did see a continuation to hit our previous high back in early June. This was the overall plan. It was looking pretty promising. It was looking like it was following market structure really well. No real worry until we saw that massive sell-off that occurred. So I was really hoping that the price would hold above this zone, because we can see back in the previous structure, this was a previous resistance which would ideally turn into a new support from the horizontal level as well as the descending level. So the fact that we really just broke right below it and are still tumbling. Obviously, this is going to create a huge risk off environment, right? So overall equities markets are dropping, and I think the daily chart really shows this massive rejection. So we can see that we saw the price go all the way up to the previous high right here, but the sellers brought it right back down, and we're actually closing below the candle open, which is right around here. So there's a ton of sell pressure that recently got introduced to the market that is really pushing the price below this zone. We do know that this previous level of resistance right here, which is acting as our new level of support, is going to create a demand zone at around the 1340, 1335-ish range, which is going to be right around here. So what I currently see right now is a major level of resistance that's descending with the anchor point at the all-time high. Second touch, third touch, lots of rejections, lots of type A and type B valid rejections, which for me is a really important level on the chart that we do have to indicate. And now we are going to be looking like it's going to be a potential descending wedge where it's going to be a horizontal zone of support or something that's going to be proving to be a level of demand here, and then we see a descending zone keep the pressure on the price from the sellers. So it was looking really phenomenal. It would be great for a potential opportunity for a long if we were able to hold this previous resistance, which is going to be a new level of support. We could not hold this zone. We got rejected and came right back down, which to me is indicating that we're going to be stuck within this range for a little bit longer. We'll jump into the smaller time frames, but the fact that we broke below this zone, in my opinion, is pretty damn significant. We could see a nice little retest of this zone, which is going to be acting as a resistance zone yet again, but the daily chart, in my opinion, shows this the best out of any time frame because it just shows how aggressive that sell-off was and that rejection off this key level of this previous high. So right now we are contracting in volatility in terms of the higher lows and the lower highs, squeezing the price towards the apex. We have not broken this major level, so what we're looking to see hold is this zone around here. As long as this zone is able to hold above, or as long as the price is able to hold above this zone, I am not looking for any major risk off situations or trades just yet. But if it does break this zone, that, in my opinion, would be a big shift in structure because we had the previous resistance turn support, failed to break to a new high, massive rejection. If this is a bearish engulfing candle and then we get some momentum to move to the downside, that could give me a little bit of indications that we'd be shifting into a risk off sentiment. And we do see that within the FX markets. Euro absolutely mooning. And we can see that within the FX markets here in a little bit, but Euro is taking the charge, going and getting more bids than every other risk off currency, like the yen, like the US dollar. The Euro is definitely beating and outperforming basically every other currency at this point in time. And the Euro is a safe haven, so it makes sense with the overall structure. NASDAQ is pulling back to retest the previous support we saw right here. You can see, I guess it was a resistance turning into support. So the NASDAQ is still holding market structure, making higher highs and higher lows. So don't want to be too early, but it does look like we're getting a pretty significant pullback. If we do see a failure of a support held right here, and we see the price break back into the zone, so if we see the price break back into this range, that would be pretty bearish because this was a potential blow off top where we get a, let's bring that over, where we get a move that is contracting in volatility because you see the resistance is actually a slightly decreasing compared to the ascending support. I guess not really. The further you look at it, looks more like an ascending channel. But the fact that we had the resistance get broken, retested, and it's going to create a potential opportunity to move to the upside as long as this demand zone holds. So don't want to be too bearish, but the NASDAQ's going to be the last to turn, in my personal opinion, and the first to move to the upside. So this is going to be your extreme risk-on instrument, whereas things like the Russell 2000 is not as bouncy, not as perky. It's a little bit laggy, and it's not really seeing the buy pressure that for example, the NASDAQ is seeing on the move up. So it's just consolidating. We've been talking about this index for a while. We see a potential head and shoulders that is just consolidating, not really able to push to the downside. But the fact that we have not broken above the right shoulder at around 1460 does give me a little bit of indications that we're in a little bit of an equilibrium where buyers and sellers are pretty even within this index, at least compared to the NASDAQ, which is obviously more weighted for the buyers being more confident. But if we see a break below 1360, that to me is a huge indication that this is now a risk-off environment. And I think that the S&P does look like we're shifting into that environment as well. So it's a bit of a turn, and we can also see the VIX here is breaking back into the zone, which is not great for any risk on exposure when the volatility is increasing and increasing exponentially like we see here. Obviously, that's a very risk-off sentiment. Things like equities are dropping, crypto's dropping, safe haven currencies like euro, like Swiss franc, like US dollar, like Japanese yen. These are the currencies that are going to be doing well compared to more speculative currencies like GBP, South African rand, Canadian dollar, Australian dollar, all that stuff. So this definitely indicates that we are turning into a risk-off sentiment. We're going to get back into the trading range like we were talking about last time. Ideally, we wanted to see a slow fade off, something like this, and we did not get that. We actually saw an increase in volatility, so we'll see how it goes. I guess we're making still higher lows, which isn't fantastic, but we could just connect like so. So the fact that we have failed to make a move to the downside, and now we are within that trading range, give me a little bit of optimism for shorts in equities, but overall risk off sentiment is increased when the VIX is increasing. So in short, not going to be trading this, but it definitely gives me a little bit of insight as to kind of the worry, the fear, the uncertainty of global investors. Let's just keep that on the 2 hour, and I just like to switch this to a 4 hour so we can see where it's going to be closing for the S&P. Actually, let's stick to the 1 hour to see where it's going to be closing, because we got 3 more minutes until this major sell-off closes on a large time frame. So that's the overall equities market. Definitely looking like we are shifting potentially to a risk-off environment. It did look really good over the weekend, and the S&P really started to move up, breaking this major level of resistance on the Sunday night. So that's why we were talking about a potential continuation of the risk-on environment. But with this new data that's coming in, huge sell-off on the daily. We see massive rejections. That is going to give us a little bit of a different bias and a little bit more of a conservative approach to, I think, this upcoming week, where, you know, alts may be something that we want to be steer clear from for continuation patterns to the upside. If this particular current structure continues, where we see sell-offs in stock markets, you see volatility increase, you don't want to be in alts to the long side in this market environment if it does continue, in my personal opinion. So we'll take a look at the altcoin market, but let's continue on with the global macro. We've got a pretty good understanding just from the US equities, and we can see definitely makes sense due to the sell-off in the US markets. The global equity markets are hesitating to make a higher high. We see the Japanese stock market index hold the previous resistance. We see the FTSE 100 actually create a lower low as well as a lower high. So the FTSE 100 is very weak compared to other global indexes. Australian stock market index is not doing awesome, but is still being able to make a higher high and higher low. So that's all right. So we do see a little bit of a sell-off. It's not substantial, but it does look like we could see a shift here potentially if this momentum continues to the downside. So we do have to be careful of that within this upcoming week. I'd be a little bit cautious of really looking at any more alts unless you are in them. Maybe manage your risk, maybe move that stop loss a little bit higher, because that's quite a significant sell-off that we had within the equities market. So right now it doesn't look too bad, but that potential move is coming because we did see a break in the previous possible level of support, which you didn't really see come into fruition, which was this zone around here. I would have really liked to see this zone turning into a support, but we just broke right below it within the S&P, which really shows the aggression, the strength, the conviction, and the confidence from the bears, from the sellers, which in my opinion is new data that you need to work with. You can't just completely ignore that. That's brand new data, and that's going to give you information about the current structure that that we didn't have back in yesterday night, basically. All right, so that's going to be global markets as well as U.S. markets. We're now going to look at the TikTok questions because this is live on TikTok as well. And then let's look here, and then we'll get right into Tesla to infinity and beyond. So I don't trade equities. I know that Tesla's been on an absolute roar. A lot of people think it's overvalued. It's beat Toyota and being the #1 car company in the world, and a lot of people value it as a tech company, not just cars, right? Because they are leading in not just autonomous driving, but for those who are not living under a rock, you I'm sure well aware is that Tesla is leading in many things. Elon is an absolute beast. I firmly believe that Tesla is a great opportunity as a formative investment, but in terms of investing at this point, I can't really give you that information. I do think that Elon Musk is a phenomenal entrepreneur who's a little bit quirky, let's just say. What are your thoughts on Elrond? I do not know. I have no thoughts on it. Why did CoinMarketCap consider Elrond of store value that makes 2 out of all alts, Bitcoin and Elrond, and SNSS? I don't even know that, to be honest. Let's just look here. Yeah, ERD. I do not know much about it, to be completely honest with you, my man. So, do your due diligence. I can look more into it a little bit later on. But I currently do not have any bias towards it. Alright, 150 Demon says, can you do analysis on XAU? Yep, we can do an analysis on both metals a little bit later in the video. I'm just quickly going over the questions here on TikTok. Gold to 4K from JP Diamond. Yeah, we'll see. That's a pretty big move. I'm mainly in silver, not gold right now, but we'll talk about that a little bit later in the video. FFMC Geek said Toyota makes many products, even forklifts. And Benjamin said, how do you get into stocks and trading, and do you like XRP? How do you get into stocks? It depends on what you're looking to do. You could be a swing trader, which is like holding overnight for multiple days, weeks. You could be a long-term investor where you're, I guess, looking at probably just, ETFs, exchange-traded funds that are very low for management fees. That basically is a index of the S&P, the NASDAQ, or whatever index that you're looking to invest in. Or you could do single companies. Obviously, there's a huge, broad range of possibilities of how to go about trading or investing, so I can't really give you a blanket statement for a single system or strategy to use. So find out what you're looking to get into. Find out what sort of management style, like if you're passively investing, just putting in $50, $100, $1,000, whatever it is, bi-weekly, monthly, into your portfolio, and you're just passively investing. It doesn't matter if the equity, if the stock, if the index goes up or down. It does not matter. You're putting the same amount of money in every single week, every single month, whatever it is, and that is dollar cost averaging. That's a decent way to go about long-term investing, in my opinion. But if you are looking to be more active in the markets, if you're looking to swing trade or day trade, that is definitely, you got to put some time and sweat equity into it. It's not going to be extremely easy, but if you are dedicated and are willing to kind of do anything it takes in order to make yourself a success in the realm of trading, then it's a possibility for sure. But for other people that says day trading is extremely easy, swing trading is extremely easy, it is not easy. Takes a lot of work, takes a lot of time, takes a lot of discipline, but it is definitely possible. Elon Musk, he made PayPal. I'm starting to believe he made Bitcoin. JP Diamond, yeah. So he made like PayPal. He made, I guess it was X.com initially, and then he made PayPal. He sold that, and then he dove into Tesla. He dove into Solar City, and then he dove into SpaceX, and then he has Boring Company. He has Neuralink, which is connecting computers and the internet to the brain. He's an unbelievable entrepreneur. He's a little bit odd in terms of like the fact that he tweets that his stock is too high and names his baby like weird ass names. But in terms of just a businessman and an overall entrepreneur, he is innovative. He takes action. He executes extremely well. And if you're looking for a person to invest in, I would say he's a very good bet, just in my personal opinion. JP Diamond, FFM, and question mark. Not really sure what you mean. Let's go back to his question. Yeah, I'm not sure exactly what he meant by that. Elon is savvy. Yeah, I completely agree. Like, if he wants money, he just sells flamethrowers and shit. Like, it's pretty crazy to believe, but he's kind of those people that really just has an idea and executes like extremely well. So yeah, I do believe that the things that he manages, the things that he builds, are pretty high quality and they have high potential for growth. Just a personal opinion. So let's now get into some other stuff here within the global macro update. We're going to get into the US dollar currency index, which is DXY, which is basically 60% euro inversed. So euro USD sort of looks like this. And what we can see is it's also comprised of other currencies. It's a basket of currencies that we're comparing the US dollar to. But in short, what we're seeing is the US dollar weakening with this nice ascending triangle, ascending wedge that broke to the downside. It had its impulsive move, not extremely strong, but we are seeing weakening. And what we'd like to ideally see in this perfect world, if it was a perfect world, is to see a fade in the US dollar similar to this if we were in a risk on environment situation. But we do see that failed lower low. So we can see right here, we have a nice little support that's created here, a nice little base. So as of right now, we're creating a descending channel, but we failed to make a lower high. We have a nice little resistance zone right here. We're just going to create that zone like that. So if it starts to squeeze, contract in volatility, hold this support zone and start breaking to the upside, that would give me a little bit of worry, because if stocks are moving down and the US dollar is increasing, that is going to give me a potential indication that we're entering in a risk-off situation where you want to be long stuff that is safe havens in the currency space. If you're in FX, crypto's probably not going to be doing phenomenal if the US dollar is strengthening quite aggressively, which means alts are going to be not doing great as well either, right? So Bitcoin's going to be the leader, alts are going to be the follower in terms of direction. And that's how we play the crypto market. So the fact that the US dollar is failing to make a lower low, holding that previous low as a nice new support zone, and if it starts to contract and move to the upside where we get a potential hold and a higher low from this low here, that would give me a little bit of worry as to the risk on environment that we are looking into trading, and that could shift into a risk off. Very simple structure, very simple cause-effect relationships that we're trying to understand within the market. So not a lot. We're not obviously trading the DXY, but this is just a tool that we use to gauge the overall strength of the US dollar. Quick look at bonds. Not a lot of interest in bonds. If we see the bond yields absolutely plummet, a lot of people are driving capital into bonds, which is obviously a flight to safety, which is a risk-off situation. We're not seeing that, so there's no major risk-off indication in bonds just yet. But in the US dollar, we're seeing a little bit of pickup. We're seeing a little bit of bids coming in, which is definitely a little bit more of a risk-off sentiment. But we don't want to make that judgment too quick. But the shift is turning slowly. But if we get a retest and a lower high and then a lower low on the SPX, that would really give me an indication. Not really going to get into oil versus gold. We're just going to get right into gold, silver, and the gold and silver ratio. So the first thing we really want to quickly talk about is the gold and silver ratio. It did break that previous low, formed a lower low. So we are going to really want to look at silver instead of gold. We're already in silver compared to gold. I have investments in gold, but I'm not currently trading gold. I'm only trading silver. And why is that? It's because the gold and silver ratio is absolutely plummeting. We had the nice ascending wedge that broke to the downside there. We were already in gold during this whole move, which was absolutely phenomenal. And then now, in my opinion, we're getting our next move to the downside for gold and silver ratio, which means that you want to be in silver instead of gold if you have to choose one. I'm not saying that gold's bearish. I'm hoping that gold's going to consolidate or at least continue to move to the upside. But at the end of the day, if I have to pick between gold and silver, I want to be in silver because of the gold and silver ratio. And silver is being relatively stronger than gold at this very moment. So we see this wedge that is potentially kind of look like it failed to break above this horizontal zone. That's why we like to wait for market structure as well as a break in a major price action pattern. So we have two validations and two confirmations to give us a little bit more confidence in our breakout. But we don't really see it to break out just yet. We're just contracting in the volatility. We failed to break this recent high. So as long as it's holding above 1795, around 1800, I'm going to be looking at silver as a long. But if it starts to break down, especially for AXU to go down below 1790, that's going to be a pretty big worry for me because this ascending wedge support is around 1795. And if it breaks below that, that could be a break to the upside, a melt up of the ascending wedge. And then if you break this key zone of confluence where you get this ascending support and ascending support from the previous resistance, both acting as a demand zone, if you get a break below both zones at around 1790, that's going to be a huge level for the price to pass for the sellers. That's going to create more confidence and more conviction from the bears of gold, and it's going to create a little bit of weakness in the bulls. So if we see that, obviously that's not phenomenal. Ideally, in a perfect situation, we want to see a nice consolidation and a continuing move to the upside, kind of like that maybe. Something like that where you get consolidation. You could get a pretty big move to the downside. Wick came back up, retest the previous resistance for a new level of support, and then we go on our merry way. Obviously, we don't exactly know what it's going to be doing, but we'd be looking for something like this in terms of market structure. We want to see the price break this key zone, squeeze a little bit deeper in this wedge, but as long as this is holding this structure and holding above this key level of support that we have around 1790, I'm going to continue to look at silver as an opportunity. And we can see when we entered silver, why we entered silver, and once we broke above this zone, move that stop loss to break even, and we are guaranteed profits at this point in time. So what are we looking at now? We see that recent high turn into a new level of support. So holding market structure in a bullish trend still. There's no reason for me to look to short. To look to sell. There's no reason for me to really do anything within this trade other than make sure that I'm managing risk. I moved the stop loss from here to entry to above this zone to now below this major key level, which we can see. And then I got the target at $19 and around 60 cents, which we're getting to. We're past the $19 mark, which is great to see. I got in at $18. So as long as gold's consolidating, I do see silver moving to the upside. And there's not much more to talk about. It's looking phenomenal. It's looking great. And it's kind of an odd one because usually gold is negatively correlated to the S&P 500, right? But then if we're actually looking at correlations, silver isn't extremely correlated with gold. So if we're looking at 180 days, really looking at a larger time frame, and we go to silver right here, we can see what it's correlated to on a 180-day period. And if we're looking at the US dollar index, it's actually extremely negatively correlated with the US dollar, which is, for the US dollar, a risk off. So then if you're negatively correlated, that means that the silver would possibly be a risk on currency. But when we are looking at the 30-day, things do get a lot less correlated. So let's just go like here, and we can see with things like Swiss franc, with things like US bonds, which are both risk-off currencies, we see that silver is positively correlated with them, and then things like the Dow Jones, which is a risk-on, you see negative correlation. So right now, if you're just looking at the 30-day correlations, silver is a risk-off instrument, asset, opportunity, so we're going to be looking at the market in that perspective. And gold obviously is going to be a risk-off trade. So let's look at gold, which is right here, GCQ. And we can see negative 43 with the Dow Jones, right? So it's extremely negatively correlated with risk-on currencies and indexes and opportunities. So when things are falling, when things are not looking great for stocks, when the dollar is starting to pick up, we could expect that silver and gold is going to get some bids as well, because there's fear, uncertainty, worry within the market, and especially with the monetary uncertainty that we're seeing right now with central banks printing a tremendous amount of money. Things that are fixed assets like BTC, like silver, like gold, you can't print them just out of thin air, absolutely nothing. It takes energy to create these assets. And these are the things that have historically done well in monetary uncertain times. For example, like the late 70s when there was a weakening dollar, worry about inflation, CPI numbers were going up. What asset did extremely well? Obviously, gold was on a massive parabolic move. All right. Quickly looking at the questions here. Gold-backed... I agree with that, but currently U.S. production isn't even near peak for global competition. Frank says, is there any gold-backed crypto you suggest? No. If you're just looking for gold-backed crypto, I personally would just buy either bullion, so you can physically have it. Like, what is bullion? So this is like bullion for silver. So this is my single 10-ounce thing, bullion for silver. So you can accumulate bullion if you'd like. You can just trade it using CFDs, futures, whatever the case may be. But for my gold and silver, I just invest in either bullion or just, trade it. And that's what I do. And then for crypto, I have a ledger that I have cold storage, slowly funneling BTC and Ethereum in. And then I have a few other smaller positions for alts that are looking really solid as well. So I don't really have gold-backed crypto suggestion for you, unfortunately. Gold-backed crypto, wow, that's the first time hearing that. Yeah, it's pretty interesting. So it is slowly getting into the blockchain realm. But yeah, like I said, I personally would rather hold bullion, just my personal opinion. If you have a tremendous amount of bullion that you are holding, you can go to a vault, you can go to a safe, you can go to a service that provides that with insurance, so you're basically good to go in that field, but obviously it depends on what you're looking to do with it. All right, JP Diamond says, Vancouver real estate tanked this year in BC. Assessment yearly report, it's going to tank more over years. I could definitely see that because the current market is definitely overvalued. There's a lot of Chinese speculators that came in, and it was pretty common to see houses that are not lived in, like multi-million-dollar houses that are completely vacant for like 3-4 years. And what people do around the globe is buy them, hold them, and they appreciate like 50%, 100%, 150%. Crazy numbers. And if you're buying like, multi-million-dollar homes, you're literally making like $2-3 million in a single year or a couple years. So there's a lot of speculation. There's a huge bubble. So it totally makes sense that there's going to be a little bit of a pullback in the real estate market in Vancouver. Definitely makes sense. I think it's necessary because the current market environment is pretty overvalued in my personal opinion. Townhouses still in Vancouver are going for like $1.4, $1.5 million. So it's pretty crazy. Search VERI, ticker name, and what they were trying to do with metals market and crypto. VERI. Veritone, artificial intelligence company based in Costa Mesa, California. Don't exactly know what they're going to be doing, but let's just look at a chart here very quickly. So that's basically the overall crypto market, or sorry, metals market, not cryptocurrency market. Quick look at the WTI Western Texas Intermediate Crude Oil, and then we can jump into VERI. And also, if you have any other questions, just drop them in the comment section, but we will be looking at VERI first after we look at the oil markets here. So we noticed that there was a key level of resistance around $40.50. We were unable to break above that, failing to make a higher high. So right now, what I see is just a consolidation going sideways. We have a very well-respected key level of resistance, and we're still holding a series of higher lows. This was the previous, let's just get our, right here. This was obviously low, this was obviously low, and this was obviously a low. So we're still holding a series of higher lows, but we do see there was a resistance 1, resistance 2, resistance 3. So we're squeezing towards the apex of the structure. So it does look like we're going to be either pushing to the upside or downside. In my personal opinion, it does look a little bit more like we're going to go back to the downside here, where we may be testing this low at around $36. So that could be the next opportunity for WTI crude oil, which would be in line with the overall global macro analysis in terms of the risk on, risk off structure. Because if this moves down, that's going to create a risk off sentiment. Because when oil goes up, there's more production, there's more transportation. Obviously, that's good for overall economic activity. And if people are not transporting things, if people are not driving places, if people are not producing more goods and services with oil, including a lot of them, obviously it's going to be a move to the downside. So if this continues to move down, I would expect the overall risk-off sentiment to continue, with stocks moving down, with crypto moving down, with alts not being as aggressive to the upside, seeing huge bid volume, and that's going to be the overall sentiment that we would be looking for if this does continue to move to the downside. And let's just zoom in here a little bit. So we did break this zone. We were looking at this potential level to hold this previous resistance, turning into new level of support. Old level of support turning into new level of resistance. We actually did break above that zone, so now we're testing that main structural high of $40 and around 60 cents. And if it holds that zone, I think we could see a nice move to the downside here. But if it starts to break up, that would be a pretty significant fake out. And then we'd be looking for the candle closure on the daily to close above this major structural zone for us to indicate that this ascending wedge would continue to move to the upside, which then we would look for, let's get our brush, a potential melt up, right? That would be the next opportunity if it does look more bullish. But right now, with the S&P moving down, overall risk sentiment is leaning more towards risk off. I think the higher probable situation for oil is to start trending down back into the $36 range, which is our main demand zone for this asset. So a little bit of fear in the markets for sure. Let's just go back to this. We got to close well below the zone on the daily. Look how significant that rejection is. So we're going to be making sure that we are really, really careful for risk on trades. And I don't think I want to be looking for like massive take profits. If I'm going to be looking for risk on opportunities, I want it to be quick. I want it to take profit. I don't think it's going to be an extremely trending risk on environment. I think it's going to be a little bit more choppy. And maybe you can put that into your trading plan. I don't exactly know, but we're definitely in a situation where we're getting shorter moves, shorter impulse moves, and that's usually the trend in summer. Summer is usually a little bit less aggressive, a little bit less trending, whereas in the winter, fall, that's going to be where we're going to, well, definitely more winter. That's going to be where we're going to get a lot more aggressive pushes to the upside, to the downside, where you're wanting to really let those profits run. But summer, historically, is a little bit more quiet, is a little bit more relaxed, and we may want to look at taking profits a little bit quicker because these impulse pushes are not going to give us a huge run like we are wanting in obviously every single trade, but that does not happen. All right, so that's going to be my overall analysis for the global macro update. Let's quickly look at some TikTok questions here that came into the comment section. Yeah, better to be gold backed. Never know if USD tanks. Yeah, very good point there, and we've talked about this before. A lot of these different stablecoins, USDT, MakerDAO, they're pegged or tethered to the US dollar, right? So if the US dollar starts crumbling, well, it's not very stable, is it? So I completely agree. Having some alternative as a store of value, like gold, which has proven to be a store of value for thousands of years, is a great opportunity. But I do think that if gold's on a bull run, cryptocurrencies will be the more appreciating sector to be in, because I view gold, silver, and crypto into a single basket of like anti-fiat or currency proliferation basket. So because the central banks are printing so much money, obviously that's going to create potential inflation in the future when velocity of currency starts to pick up. Right now, there is quite a bit of deflationary pressure due to A, the velocity of currency dropping, and B, demographics, especially in Japan, really well known. And you're not really able to see huge increases in CPI numbers, but we can see in historic times, it doesn't take, a month from interest rates dropping to massive credit creation into a bubble. It takes time. And this chart really shows that shift really well. Give me one moment here while I get the historic, nope. There we go, right here. That's not the chart I'm looking for. Give me one moment here. Long-term U.S. interest rates. Perfect. So we can see right here, when was the last time the U.S. had extremely low interest rates? Well, it was back in the 1950s, right? 1950s, basically for those 10 years, interest, or 40s and 50s, until like the mid-50s, we saw interest rates at like 2%, 2.5%. So very, very low, historically low interest rates, right? After the Great Depression and World War II was from 41 to 45, and around 46, we had extremely low interest rates, right? And there was massive credit expansion from commercial banks and central banks, which was huge amount of stimulus, right? This is extremely dovish, where there's not really any worry of inflation yet. There is just a worry of we need to stimulate the economy. And how do we do this? Lower the interest rates and print that money, right? That's how you create stimulus as a central bank. And this is what we see right now, right? What happens after? It takes decades. From 1950 to 1970, nothing crazy, right? But from 1970 to 1980, that 10-year window was the biggest gold bull run in modern history, by far, right? And this is, in my opinion, what we're setting up for. We have extremely low interest rates. We have 25 basis point interest rates for the federal funds rate, right? We're printing shit tons of money. There's massive credit expansion. Sooner or later, there's going to be a worry of inflation, right? And what can the central bank do to curb inflation? They can raise interest rates. Well, if they raise interest rates, what happens to the overall economy? Well, it's harder to borrow money. It's more expensive to borrow funds, right? So then it's going to be harder for businesses to borrow funds, which makes it less likely for businesses to spend on other services and products. And it's a whole circle, but when there's credit contraction, that's overall bearish for risk on equities, indexes, and all that stuff. So what we're looking for is when we start to see the CPI numbers go up, we're going to be looking at central banks. How are they going to react? Are they going to just let the US dollar, let other currencies start to weaken and weaken and weaken, and you're going to get some debasement, devaluation of currency? Are they going to go that route? Well, basically, everyone who uses that currency loses, because if you're saving in that currency, you're losing value. That's one way. Another way they could do it is, okay, we don't want to basically destroy the savers that are living in our nation. What we're going to do is try to slow the inflation rate or the CPI number by raising rates. And if they do, that's going to create, in my opinion, a potential move for a bearish or at least a consolidation where equities and other risk-on instruments are not going to be the place to be looking. You're wanting to look at places that are in the fixed supply assets like gold, silver, cryptocurrency. That's my personal view. JP Diamond says, give me one moment here. I got to go back up. What about, gotta go a lot of questions here, which is pretty good. Hit silver with a stick. I doubt it will move. Silver is boring as of right now. I agree that it's boring right now, but it's been relatively stronger than gold recently, and that's why I'm choosing silver over gold. As I'm looking at the gold and silver ratio, and it's turning to the downside, indicating that silver is going to appreciate at a greater rate compared to gold. And silver does look like it's a more well-respected structure on the 4-hour, 2-hour, with a very well-respected symmetrical triangle, and that's why we chose silver instead of gold, which played out very nicely. All right, JP also said, did you know about Bitcoin has been declared as Gold 2.0 internet gold? Hopefully he knows that Bitcoin doesn't really have intrinsic value. Well, you can argue this with a lot of things, right? But the ability to transact an asset internationally almost instantly, that's value. How is that not value, right? If a company created Bitcoin, that company would be worth a shit ton of money because they've basically created a way to transact value internationally that beats any other system previous to it. Before cryptocurrencies, before blockchain, what was the fastest method of transacting value from one place to another? You literally packed it up in your suitcase, carried cash, and flew to wherever you're going, right? How inconvenient is that? And, the SWIFT system was monopolized by the Fed, the United States government, so you can't really do much. So the fact that you can now bypass the SWIFT system, bypass the US, and use a decentralized network to transact value globally with an extremely low cost basis, I don't know how that's not valuable to the human civilization. Not just to you, but to the entire human civilization. I don't understand how that isn't valuable. Maybe you can give me some information on why you think that isn't valuable, but, transacting value and being able to exchange in free markets creates very fluid economies. If you have a lot of barriers to transact value, if you don't have a reserve currency or any currency that's able to be fungible, divisible, transactable easily, it's going to be hard to do business, which is going to be hard to create an efficient economy. If you have an entire world that is extremely efficient in transacting and it's cheap, everyone can use it, everyone has the ability to create an account, send transactions, receive transactions on a global scale, that is extremely valuable. We've never had that as a civilization before. So I would argue that is extremely valuable. What about Mint to Canadian Royal Mint stocks? Don't know too much about them. I don't really follow the equity game. I'm mainly in futures, CFDs, which is contracts for difference, or just physical bullion. JP says, I believe the trend where people made profit from real estate market is over. That's a huge claim. We'll see where it goes. I personally don't have a lot of exposure in real estate, but there's some people who I know very close to me that have a shit ton of exposure in real estate. They're doing very well, but if things go south, that obviously will take a turn for the worse. So I hope that isn't the case for them, but we'll see where it goes. The big question for if real estate is going to collapse or not is if we're going into a major deflationary period or a re-inflationary period. If we're going into a re-inflationary period, I don't think real estate is going to absolutely fall and collapse. Because if there's more cash, if there's more currency, if there's more credit to be around, there's more money to fight for the fixed amount of real estate in an available area. But if there's deflation, and if there's a contraction in credit and a reduction in the available money to, citizens, that's going to make it, there's going to be less bids on houses because there's less people who are able to receive the credit in order to purchase the house, which is going to create less demand for the real estate market, which is obviously going to make it drop. So I think the bigger question is, are we going into a reflation or are we going into a deflation? And that's like the big question that we're trying to understand here for the macro perspective. The music stopped playing in 2017. That's what Jamie Dimon says. JB also Diamond says, gold is whack, it's an asset you need to worry about keeping it safe. Gold is whack. It's an asset you need to worry about keeping it safe. Bitcoin, you don't have to worry about that. I don't think governments are gonna take back the gold. Like, there was one time in history where literally government says, you got to give us all your gold. You know, we're not going to pay you anything, but you're just going to give us your gold because we're the government and we do whatever the fuck we want. And you're a citizen and you're our sheep, right? That is how governments and central banks work. They're not your friend. They're not your, comrade or anything. You want to be against them, in my personal belief. Central banks want nothing positive from you. They only want to steal from you, take from you, and they're not there to help you in any way whatsoever. Same as governments, in my personal opinion, as well as central banks. Yes, they create roads and lights and electricity for houses and all that stuff, but I don't really have a positive view on governments, and that may be a little bit biased of me, but that's just my personal opinion. So I don't think they'll take it, but I completely agree in that, they have done that before, whereas Bitcoin, as long as you have it on your ledger, you're pretty well safe. If you want to take that next step, you could look for privacy tokens. So the most popular privacy token is Monero, XMR, and that would be your best bet if you really want to go rogue, incognito, and just completely have some of your capital off the radar, I guess you could say. Yeah, trend where people made profit on real estate is over. What do you know about G20 summit happening this year in November? I read they'll be talking about virtual currencies. I haven't read too much about it. November is still pretty far away. We'll see how it goes. The information that you can read on the internet is probably more than the information I have in my brain on that. That's the first thing they'll talk about in the summit. Yeah, so I hope so. So there's already countries, not even just talking about like single companies that are actually trying to create certain projects, but even central banks. Like China's creating their own digital currency, so a digitally backed central bank. I forget what it's called. There's a certain acronym for it, but basically central banks are creating their own cryptocurrencies, and China's doing it. The Fed is slowly trying to implement it. But China is really taking the lead and trying to develop their own blockchain. Obviously, it's not going to be open source. You're not going to be able to see the ledger. It's going to be centralized. Why would it not be if you're Chinese government? But the fact that they're actually going to create a digital currency, from the central bank backed by the government is pretty interesting. So it's not just these decentralized projects that are getting a lot of hype around it, but there's huge shifts in central banks and governments, and they understand that this is the future. 100%. Right? We're not going to stick with cash forever. This is going to be the future of the next monetary reset, and people are being aware of that, or at least central banks are aware of that. Yeah, that's correct. For another 5 to 7 years, I will stay away from real estate market. That's what Jamie did. People are moving to provinces where real estate market is fair valued, like Manitoba. Yeah, so people are moving to Manitoba. I personally would never want to move to Manitoba. I absolutely love British Columbia. I love what it offers. It makes sense to not live like right downtown. There's a lot of opportunities if you're looking in a little bit of the suburbs, but it kind of depends on what you like too. Like, I'm a huge advocate. I absolutely love mountain biking and snowboarding. That is my two loves outside of economics and financial markets. That's my first love, but I can't tell you how much I love them. But yeah, and I can't do them in I could do them in Alberta. Can't do them in Manitoba. Sure as hell can't do it in Saskatchewan. Ontario's pretty shit. So really the only place that you can really do those two things in the same day would be the West Coast. So I'm sticking here. I love it. Right now, gold chart for every other currency other than the USD has surpassed all-time highs. Yeah, great viewpoint, and I completely agree that out of all these different currencies, the US dollar is holding the best. But yes, the gold chart has broken out on basically every single chart other than the US dollar. And how do you look at this? Let's just look at this chart. I don't really need this. So how do you view this? Let's just do AXU to, you could do different ones, right? You could do USD, and that's USD, but you could also do CAD, right? You could do Canadian, you could do AUD, right? You could do New Zealand, you could do Euro. Let's look at Euro, actually, just for fun. And we can see, let's go back to the weekly. There was that 2011, 2012 high, right? That high right there. And if we're looking at JPY, here's another look at the same thing, 2011, 2012, right? That was the high. Let's do AUD. Same thing, way above the recent high, right? And the only thing that is, US, AXU, USD, the only one that isn't above it is the United States dollar, right? So yeah, great point, and don't really have much more to add on that. It's just an observation, and it's to show you how strong gold is, and comparing assets to things other than the United States dollar is a really good way to gauge how strong it is, because the US dollar does move as well. You know, a lot of people may not know that, but really good point. JP, good call. Frank says, credit contraction coming. We will see. We actually didn't look at VERI tone. Let's look at VERI, just because I did say that I would look at it. Holy shit. Pretty big pump up. Got the low at like $1.50. Next major zone is around $24. We got a pretty significant zone right around here, which is going to be a key level. Let's just delete this. Massive pump, and we're getting a pullback, which is good to see. Looks like we're getting some contraction here. You can draw a descending zone, which is great on a continuation pattern to the upside. You want to see descending zones because that is going to create a good structure for potential breakout. And you got a nice potential descending zone, which is going to create a support. You can also see a support zone right around here. So mainly, you're just looking for continuation patterns to the upside in this type of structure. You're looking for contractions and volatility, and we do see one right now where we see 1, 2, 3 tests of this descending zone creating a descending trend line, and you see a horizontal zone of 1, 2, 3, 4 support, which is held really well. If it does break to the downside, that's going to be my next opportunity, is a descending wedge. I will not shift my bias to look for shorts. Obviously, this is an uptrend, so you want to be continuing with the trend. But that is how I would use my method to look at a potential opportunity for this pair. And I wouldn't enter right as it breaks. I want to see not just the price action structure break, but also the structure of the market. So you want to see a pass and a retest of this high. If it forms a lower high, you just shift it down here, and you want to see a break and a retest before our next move to the upside. So if it goes like this, you want to see a break, retest of this previous resistance turn to support. And if we don't get that, we might have to go here. And that retest would have to be from this resistance zone there. So we'll see how it goes. But in my personal opinion, just look for continuation setups, and it's looking pretty good. Don't really know anything about the fundamentals at all. So keep that in mind. But in terms of the structure and the price action, it's looking pretty good. Massive move to the upside. We see that previous resistance. That's really well respected all throughout the chart right here. Probably moving up a little bit. But overall, it does look like we are contracting volatility. And if we start moving to the upside, where we're getting at a contraction, boom, boom, that is the type of structure you're wanting to look at, in my personal opinion. So that's VERI. Let's look at some stuff here. Yep, so I got that. Whistler and Banff, top 2 best mountains. Yeah, so Whistler is absolutely phenomenal. I go there to snowboard as well as bike. It's literally like a playground if you're into sports. Like, it's like Disneyland, I guess you could say, for people who are into extreme sports. All right. Truck knobs, and it's not really for the coin/token, but more for what they are trying to do. Okay, so cool. I will look more into it. I don't know much about it, so I'm not going to be reading and trying to figure this out on the live, but thank you very much for that project. I'll look more into it and kind of just scope it out and see what I find. So thank you very much. I appreciate that greatly. And we're now going to go back to the TikTok questions here. So Frank says that there is going to be contraction in the credit or the availability of credit. So the thing I like to see for that and to gauge if there's going to be a huge contraction in credit is the doves and hawks of the monetary policymakers. So just going to be looking at this because Euro Canadian looks like an option for me. Just for a little bit of exposure for a risk-off sentiment, Canadian dollar has been extremely weak in the risk-on currencies. It's been worse than the Australian dollar, New Zealand dollar, and even GBP. And we see that the euro has been doing awesome, doing better than a lot of these other risk-off currencies, like, for example, USD, CHF, and JPY. So euro's doing really well, and CAD's doing really poorly. So obviously, that's going to be a good opportunity to continue the potential momentum. So this is the chart that I like to see in order to gauge the potential increase or decrease of credit, expansion or contraction. And we see from top to bottom, this is the most influence. Obviously, Jay Powell has the most influence, and he's a centrist, meaning he's not super dovish, he's not super hawkish. And for people who don't know what dovish or hawkish is, in short, dovish favors more stimulus, which is money printing and lowering interest rates, but this creates inflation. And a hawk favors less stimulus, so they're looking to reduce the money supply, increase interest rates or federal funds rate, which would create difficulty in risk on instruments and trades, because usually if you see the cost of money increase and contraction of credit, that's going to negatively affect the stock market and other risk on instruments and assets. So if people move more hawkish, that's going to create a potential stock market sell-off, and that will go into real estate and other risk-on assets. Where people become more dovish and they don't give a shit about inflation, CPI numbers are on the rise. We saw this back in the 70s, so let's look at, not this one, let's look at right here. When we saw back in the 60s to 70s, this blue line is the CPI number. So this is basically gauging inflation. And we talked about this previous chart. Let's look at it right here, which we talked about why there was inflation, because there was such a expansion in credit back in the 50s, 40s, and a little bit of the 60s. By the time that the 60s and especially 70s hit, there was a huge amount of inflation, right? CPI numbers were going through the roof. They were in double digits. So what did the central bank do? They increased the federal funds rate. They increased the cost to borrow money, right? And this is in the red there. So they're going to go one and one or in line with each other. They're going to be going in confluence with each other. And that's what I'm going to be looking at for a potential shift in the sentiment for credit expansion or contraction. So we will see. Just came in, I think he said. Just came in, I'm back. What's the subject? So we're just talking about overall credit expansion versus contraction. We're looking to identify if the reinflation is going to continue, meaning there's potentially going to be lots of inflation in the future, but in the short term, it's going to create a continuation of the bubble. But if we see more hawkish monetary policy where interest rates are going to increase a little bit because there's a worry of inflation, that's going to make the market drop overall, in my opinion. JP Diamond, how about inflation first for 6 months, then a deflation starts in the beginning of 2021? I would say it would be the opposite, where we're initially going to get deflation first. Like if there is a lockdown again, if we see a lack of economic activity and a reduction in the actual velocity of the currency, this is deflationary. And we also see demographics play into the pressure for deflation as well. Like we see in Japan, the demographic pyramid is very skewed for the seniors having a higher population than the working class. And we're starting to see that within the baby boomer generation in the United States as well. Japan is 20 years ahead in the demographic cycle, meaning on average, Japan has an average age that is 20 years older, so they even have more deflationary pressure put on them. And we can see in Japan, they're having troubles even creating any significant inflation. So Japan, we can see, has got way more money printing. And let's look at that right now. Let's look at Japan versus USA monetary or M2 money stock. And we can see back in the 60s and 70s, they had window guidance where the BOJ, Bank of Japan, forced commercial banks to provide a certain amount of credit to each sector, right? And this created massive credit expansion, and it busted in 1989. That was when the asset bubble in Japan burst, and they've been in a deflationary spiral since then. They cannot create inflation, and that's because of the saving mentality, the demographics pushing deflationary pressure, and the drop in the velocity of the currency. So I think that deflation will come first, but once things settle down and the demographic cycle becomes a little bit more, I guess you could call it normal, or a little bit more inflationary, where the younger generation is larger than the retiring generation, and we see the increase in velocity of the currency, then you will see inflation. And once the velocity starts to bend back upwards and you start to see CPI numbers go up, it's very, very difficult to change the psychology of the masses. Japan, the BOJ, has been trying to change the psychology of the masses for 30 years, and it has not worked, right? So it takes a lot of force, right? It takes a lot of force. So my speculation is that we're going to initially go into the deflationary point, where the US dollar may rise and equities are not going to be doing well, or they're going to be in stagflation or just stagnation where it's just going sideways. And then you will start to see worries of inflation, and then you're going to see crypto, gold, silver absolutely boom. It's already doing really well now because of the anticipation of the inflation, but I think once you actually start to see the CPI numbers go up and everyday individuals start to notice that the purchasing power is decreasing, you get a massive, massive run in these fixed supply assets. All right, so let's jump back into the charts and kind of look at some other questions here. How about inflation first? So yeah, I give you my opinion on that. Right now, I think mortgage rates, you mean? Right now mortgage rates are low price inflate, then mortgage rates will go up and house prices go down. Yeah, completely agree. I completely agree with you on that one. Right now, the federal funds rate, mortgage rates are extremely low, so it's going to create another reinflation of the bubble. So it will reinflate the bubble, but at a certain point, mortgage rates will have to rise, inevitably, in my opinion. And once it becomes harder for individuals to actually get a loan from the bank to buy a house, there will be a huge collapse. It's just a matter of time, and it's just a matter of how long the central banks are willing to keep this going, because they have enormous power. He who controls the money in an economy controls the economy, right? You could have politicians left, right, and center, whatever the case may be. I forget who said it. I think it was Winston Churchill or JP Morgan. I don't exactly know, but it was a person who was a banker in the 1900s, and really good quote. All right, so Jerry C. Diamond said, JP, Harrison Hot Springs by Chilliwack is a good place as well. It's fair value. Yeah, it's a little bit further out from the lower mainland, I guess you could say, but Harrison Hot Springs is pretty nice. A lot of nature there. That is for sure. Next 1.5 years, bull run for crypto. Most gains will be made by altcoins rather than BTC in percentage, says JP Diamond. I do agree in that when there is a bull run, altcoins will outperform BTC. That doesn't mean that you shouldn't be in Bitcoin, right? When we had the late 70s metals run, you could be in gold and make a shit ton of money and a great ROI, but silver gave you an even greater ROI. But on the flip side, when it starts falling, silver is going to fall at a faster rate, more aggressively compared to gold. So on the way up, it's great to be exposed to alts that are relatively strong. What are relatively strong alts right now? Well, let me tell you, BNB, Link is doing phenomenal. Cardano is doing really great. We also see XLM do not too bad. And this is just like long-term look at it. But the main Like me personally, I'm only really looking at two alts in terms of longer investments. It's going to be Binance Coin and Chainlink. And then I also have, I guess Ethereum is an alt, but I view BTC and Ethereum as like the two investments in crypto. If you had to do one, just do BTC. If you can only do two, just do BTC and Ethereum. And if you want to dabble and spice it up a little bit, definitely can go into some smaller alts. But that's how I personally am looking into investing in the crypto realm. And obviously trading is very different. We look for just opportunities using our method and strategy and structure. But in terms of investments, that's how I'm playing the crypto game. And I'm mainly putting my capital in BTC and Ethereum. And I'm dabbling, slowly putting money in these different alts that have relatively strong bulls holding them compared to some other alts. XRP is extremely weak compared to a lot of these different alts, just saying. Because I know someone's probably going to ask. JP Diamond also said Bitcoin will have gains to 50 to 200 times, but alts will surpass that multiple times. So JP thinks there's going to be an unbelievable bull run. I don't exactly know how large, but it depends on the global macro. It depends on if we're actually seeing enough inflation like we saw in Venezuela and Zimbabwe that people are actually needing to turn into cryptocurrencies to store their value. Or if it's just speculation and people want to make money, right? If it's just people who want to make money and currencies are relatively stable, yeah, there's going to be a pretty big bull run. But if there is the backdrop in the global macro space where globally almost everyone is losing value, meaning gold's absolutely ballooning. Things like everyday goods and services, CPI numbers globally are really moving to the upside. That is when you're going to see like the biggest safe haven bull run in modern history, in my opinion. So we'll be looking at the CPI numbers. Let's just quickly look at them right now. Global CPI numbers right here. So let's just bring this over and we can see that right now, inflationary monthly basis is very low, meaning there's lots of deflation. So Australia is in deflation, Brazil's in deflation, China's in deflation. We see Finland, we see Israel, we see South Africa, and a lot of them are going to be in very low inflationary times. And on a yearly basis, it's going to be different. But overall, there's nothing that's crazy, right? But when we start to see first world nations, G20 nations or G7 nations, when they start to have increasing CPI numbers, that's when you know the citizens of that nation are going to start to look for alternatives to store their wealth, in my personal opinion. So that's going to be something to be looking at, but right now it's not going to be something that is pertinent that we have to act on right away. So that's going to be my global macro update. Going to be completing it there. Thank you very much for coming and watching our video. Hopefully you enjoyed it. We will be posting this on YouTube, but if you do find these YouTube or TikTok lives helpful, we do these every weekday around the same time, around let's say 11 to 2 p.m. in the afternoon, mainly because it's like the low time of the market. New York session is done. Australia, Asia session has yet to start. So it's a great time in the afternoon where I can look over the markets, give my 2 cents on whatever's moving up or down. And then when the Asian session starts again, we have a good understanding of what's happening and as well for the upcoming days. So that's kind of why I do it during this time. And yeah, that's about it for the market. Thank you very much for watching. Really appreciate it. If you have any questions, drop them in the comment section below. If you found this to be helpful, informational, educational, entertaining, it would be great if you would like the video as well as subscribe to our channel. It does help us out. And if you do think that there is something that we could add or take away or do something that would make these global macro updates better in some way, we take constructive criticism well. And yeah, we appreciate your 2 thoughts as well. So thank you very much for coming. We really appreciate it. And until next time, have a good one, traders.